You are a leading Chinese ETF issuer in the area, and it is great to get your context of what really is going on in China right now. I mean, are we starting to see sentiment improve when it comes to this market?
Yeah, absolutely. I'm actually in Beijing this week, and I'm seeing the sentiment, just through a lot of meetings we're having and just being on the ground here in China. So I think, the markets have obviously been challenged over the last couple of years. A lot of it is around sentiment. And so we see a lot of money on the sidelines in China, also on the sidelines globally, looking to come back into these markets that have been oversold, not for fundamental reasons. So we believe that China can have a positive year. A lot of the investors will come back into the K-Web names, and we're starting to see that. We had a good February, and March is definitely off to a good start too.
Yeah, you mentioned K-Web. I mean, what are investor flows telling you right now? Do you think that this market in this rally that we've seen, can actually sustain?
Yes, I do. We actually think this is an incredible entry point. You have, the S&P today is the P is about 25. You have K-Web's about 19, and then U.S. internet names around 31. And K-Web's been around for about 10 years now. And we've seen during that 10 years, 67 two-year periods in which K-Web provided 100% returns. And those periods started when the P ratio was 19, right where it is today. So we see this as an extraordinary entry point, and there's a lot more upside than downside.
Jonathan, it's interesting, right? I mean, Kraneshares, you guys are super concentrated when it comes to ETF investing in Chinese stocks, and it's been quite remarkable, just given what we've been hearing in terms of what came out of the NBC and the like. I mean, 75% of your asset is exposed to the China market, but we've seen 3 years of equity declines, foreign investors still not really willing to come back into this market in a big way. Is there any sort of discussions now to diversify your ETF product line?
Yeah. So first of all, during that 3-year period, we had very positive inflows. Okay, during that 3-year period into K-Web and into our into the company. So we're happy about that, and now we're very well positioned. As the China markets come back to grow, we have as a company diversified. We're in the carbon credit space now. We have a fund KRBN. That is a global carbon credit fund. We think carbon is going to become a very important asset class going forward. And we've also are in global thematic funds and other strategies. So the firm has diversified, but our core focus has always been China. We believe in long-term China growth. We believe in the 1.4 billion consumers long-term. So we believe the next 5-10 years are going to be very positive for China portfolios.
Chinese governments, regulators, I know you're going to be meeting with some of them while you're in Beijing, Jonathan. Do you think that they've done enough so far to stabilize this market? And do you think the state intervention, or at least the buying of ETFs, does that have a long-lasting effect?
Yeah, I think it's, that's part of it. It's not a long-term solution. That's part of it. But I think you're going to see measures and further stimulus coming and positive signals, to investors. And there's a lot of money on the sidelines that can be unlocked to come back into the markets. And I think there's a lot of focus on that.
What's it going to take for I guess, more foreign investors to come back into this market, Jonathan? In terms of just what discussions you're having with regulators, what do you think regulators should do to foster maybe a more longer-term growth of this equity market?
Yeah. So first of all, I think global investors are underallocated right now. I mean, even underallocated the indexes. So, just getting that flow back to where everyone's, neutral China in their indexes is significant. So I think that also starts to happen. But look, it's all about a lot of it is about trust and seeing long-term fall through on the markets here. And look, COVID was challenging for all countries, and it's no one's prepared for that. And I think it was also challenging in China. So I think China's now 1 year out of COVID, and I think it can build back up now and create more global trust around the markets, because I think it's important global investors back into these markets, and I think they're going to focus on how to do that.
What do you think is going to be that competitive edge that this Chinese stock market is going to have compared to, other markets within the EM space like India that have been doing very, very well?
Sure. Yeah, I think, so first of all, China has proven itself in, even during COVID in key industries. So some of their long-term strategies are playing out now, and that's, upgrading of technology and manufacturing. I mean, look what's happened in the electric vehicle market here. China has the leading EV supply chain in the world. Their technology is very good. They have the most valuable automobile and EV market. And last year was the first time China is now the #1 exporter of cars globally. So with a scale platform, the strongest supply chain, you have good technology, and then the cost per unit can come down to where it's priced very competitively globally. Now they have the supply to globalize, and I think they become real global players in automobile. That's just one industry. They're doing it across a lot of the clean technology industries like solar and wind, and I see them doing it across other manufacturing type of industries industrial industries where they're upgrading technology. And then I see a transition here also happening, into domestic consumption. Last year I think it was domestic consumption grew at 7%, which is pretty good, and there's a lot more room to go there. And I think there's a lot of savings rates doubled during COVID, and there's a lot of cash on the sidelines again that can come into the economy. And then the carbon neutrality opportunity. And I mentioned, obviously EV and all the clean technology. China is now a leader at that, and I think that industry going forward is also going to globalize.
Yeah, you talk about all the bright spots of this market, and yet, we talk about why, sentiment has been so depressed for 3 years. Why do you think is the key cause of why, we're at such extremes when it comes to where, positioning is right now?
Yeah, so sentiment is about people, and and I think sentiment. I think COVID was challenging globally for everybody, and even in China for the people too. So I think it's just it just takes step by step to build back trust and confidence. It's really about confidence. So the cash is there. It's just you have to have confidence, and that's China came out of COVID much later than the U.S. and other countries. So I think they're going through that process, but don't count it out. I mean, China is it's a second largest economy in the world, and there's a lot of great growth trends here, and we believe that it's oversold. Okay, not always for fundamental reasons. A lot of geopolitics involved. And there's a lot of other dynamics involved that put pressure on the markets and created low sentiment. That can come back quickly. We've seen investors come back quick.
Jonathan, another trend that we're seeing in the ETF space is active ETF strategies. That's actually been doing quite well last year. I believe it attracted about 23% of ETF fund flows just last year. Is this something that you're seriously considering in terms of an active ETF strategy around this Chinese equity market?
Sure, we are, and we'll be coming out with some active strategies around China, and especially in the U.S. Active ETFs, using the ETF wrapper not just for traditional kind of passive strategies, but to also benefit from active managers. Has really taken off, and Kraneshares, has some active funds, and will continue to also launch new ones.